The thing we were a little more worried about was the fact that the taxes were going to go up in 2 years. And we were very concerned about that just eating into our monthly cash flow, which was slimmer than we would like and slimmer than the margin of safety we'd like to have at this point.
When you sold or when you do sell, what's your biggest frustration when it comes to capital gains tax deferral? Does anything come to mind, like the 1031 exchange or anything else?
Well, I think part of it was just, in the case of what we did 2 years ago with the property in Virginia, I hesitate to say on this podcast, but capital gains probably wasn't the biggest issue there. The thing we were a little more worried about was the fact that the taxes were going to go up in 2 years. And we were very concerned about that just eating into our monthly cash flow, which was slimmer than we would like and slimmer than the margin of safety we'd like to have at this point. But as a result, it kind of forces your hand a bit. And we had a fine market at that time, so we were able to sell at a profit. But then when the windfall comes through, it comes through with a lot of other things that's going on in our lives too. I mean, simultaneously that same year, my wife got paid out for a stock purchase that she'd made 10 years ago in a company that she was working for as pretty much a junior level employee. They offered her shares at a really low rate. That sat in the freezer for a long time, and it was a great payout. But that plus selling a duplex meant a huge year of capital gains for us. And so we didn't have an immediate project to go to via 1031. I would have liked that, but unfortunately, I'm not going to force a deal just to make that happen. But the biggest thing we tried to do was, get a good amount of charity going and kind of track the charity, especially along with those gains that we had made, so that we could also let the people we give to have windfalls. And then the other thing is, somewhat regrettably at times, but some of the other real estate projects ended up giving us a loss on our K1s because they were depreciating faster than they were earning income. In particular, we had one project that had underperformed what we had planned that we had originally invested in 2014. And so that was a nice, I don't know if this is the correct use of the term, but it was a bit of a loss leader in the sense that it was, providing that drag down on the income side for us. I mean, the only other thing we can do beyond that is focus on, making sure we're expensing a lot of things out of the businesses and, just not getting hit like crazy on it. But at the end of the day, you still end up paying. One other thing I'll say about it too is, we held it for longer than a year. So that was helpful as well. We at least got the lower capital gains rate on it.
Yeah. Very well said. Very insightful. We do have a solution for businesses, highly appreciated stock, cryptocurrency, failed 1031 exchanges, primary home. It's called a Deferred Sales Trust for our listeners who are curious about what alternatives there might be available. You can go to capitalgainstaxsolutions.com. And by the way, if you want to learn more about Trevor Ewen, that's EWEN, you can go to trevorewen.com. That's EWEN.